In this video, we're going to look at discontinued operations where a company has decided to discontinue a component, but it has not sold it as of the end of the accounting period. In that situation, a company is required to report a few things. First, it's supposed to report the revenues, expenses, gains, and losses from the component that they're going to dispose from the beginning of the period until the end of the period. So for the whole accounting period, they're supposed to report the revenues, expenses, gains, and losses from that component. They're also supposed to report any impairment losses of the assets of the component. To figure out the impairment loss, they're going to compare the fair value of the assets. So basically, fair value is how much they can get for if they decide to sell the assets. That's the fair value of the assets minus any cost to sale. They're going to compare that with the book value. And if the fair value minus cost to sale is less than the book value, then they're going to have to write off that difference. That is called the impairment loss. We'll look at an example and then we'll go through how to calculate that impairment loss. And the third thing is any related disclosures they will report in notes to the financial statements. Let's take a look at an example. Pause the video, read the question, and then we'll continue from there. It says, on April 1st, 2021, XYZ Company's management decided to sell one of the company's divisions. As of December 31st, 2021, the division has not yet been sold. From January 1st, 21 to 12/31/21, the division had $2 million of pre-tax loss from operations. On December 31st, 2021, the division's assets had a book value of $1 million. The fair value of the assets minus cost to sell was $400,000. The company had income from continuing operations of $5 million, and the income tax rate is 25%. They want you to present this information in the income statement and what is the net income for the year. So here on the left, I've posted the format of the income statement. Again, it starts on the top with sales revenue, comes to income from continuing operations, and then shows discontinued operations. This is the portion that we're going to be looking at. Before we prepare the bottom part of the income statement, let's first go ahead and calculate the discontinued operations figures. We know that we have to report two things as regards to numbers. First, revenues, expenses, gains, and losses for the discontinued component from beginning of the year until end of the year. Since it has not been sold at the end of the year, we have to report all the revenues, expenses, gains, and losses for the entire year. They told us that from January 1st, 21 to December 31st, 21, the division had a $2 million pre-tax loss from operations. So we are going to have to report that $2 million. And it is a loss, so I'll put that in parentheses. And then we also have to record any impairment losses. To calculate the impairment loss, first we take the fair value of assets minus cost to sell. Again, the fair value is what the company can expect to receive for these assets if they were to sell them. They said that the fair value of the assets minus cost to sell was $400,000. We're going to compare that $400,000 to the book value. So let's look at the book value. They told us the book value of the division's assets was $1 million. So we compare the two. If the book value is higher than the fair value of the assets, then we have to write down those assets to the fair value. Is the book value greater than the fair value? Yes, it is. So we have to write it down. We have to write it down to 400,000. So how do we write it down? We have to basically take a loss of 600,000. We're going to record a loss for the difference. To calculate the difference, you take 400,000 minus 1 million. If this is a negative number, then we have to include it. If it's a positive number, then we ignore it. Now this happens to be a negative number of 600,000. So we have to include this impairment loss. Therefore, the total loss from discontinued operations, including the impairment loss, is 2,600,000. So we're going to add this 2 million and the 600,000. The total loss is going to be 2,600,000. And that's a loss. That's a number that we're going to report as a loss from operations of discontinued component. Now let's go ahead and prepare the bottom part of the income statement. I'm going to use a different color to do that. Let's start with income from continuing operations. They told us that income from continuing operations was 5 million. So we're going to start with the 5 million. Next line item is discontinued operations. And what we just calculated is called loss from operations of discontinued component. I'm not going to write everything out since you can already see it. So loss from operations of discontinued component. And then in brackets, we're going to say including impairment loss of whatever the dollar amount. How much is the impairment loss? We calculated the impairment loss to be 600,000. So we're going to say including impairment loss of 600,000. That's how we're going to report it. The total dollar amount of the loss from operations is 2,600,000. We're going to put that in parentheses because it's a loss. 2,600,000. That's this number we calculated. Now, if you look at the next line item in the format, since we have a loss, we will have an income tax benefit. If we had a positive number here, if we had a gain from operations, we would have an income tax expense. But since the company incurred a loss, there's going to be an income tax saving. So we're going to call that income tax benefit or income tax saving. And that's going to be 25%. Company's tax rate is 25%. So we're going to take 2,600,000 and multiply that by 25%. And you would get $600,000. No, actually, that's $650,000. So the income tax benefits, because the company made a loss of $2,600,000, the company's saving $650,000 on taxes. We're going to put that as a positive number. Then we're going to put a line here and net it out here. This is going to be the loss on discontinued operations. The loss on discontinued operations is negative 2,600,000 plus 650,000. That gives us a loss of 1,950,000. Now we are ready to calculate our net income. Net income is the total of 5 million income from continuing operations and the loss on discontinued operations. So total net income is 3,050,000. That's it for this video. If you have any questions, please let me know.